Let me be blunt. If you're investing right now and you think you're safe just because the market hasn't collapsed yet, you're already walking on thin ice. The real danger isn't what you see today, it's what you feel tomorrow when the storm hits. And trust me, it's coming faster than you think. After over 30 years in business, watching markets rise and fall like clockwork, I can tell you this: 85% of investors will end up broke when the next economic downturn sinks its teeth into the global economy. This isn't just some doomsday prophecy. It's backed by cold, hard statistics. During the 2008 financial crisis, according to Dalbar's quantitative analysis of investor behavior, the average equity fund investor lost nearly twice as much as the market itself because they panicked. They sold low and bought high, exactly when they should have done the opposite. And guess what? History is about to repeat itself. Because when fear takes over, people lose their minds. Rationality flies out the window. Greed and panic become the two main drivers of decision-making. The crowd will run for the exits at the worst possible time, and if you're not prepared, if you don't have a financial defense plan baked into your strategy, you'll be crushed right along with them. I've seen this play out too many times. Smart people, people with good jobs, good families, even good savings, they lose it all in a matter of months. Not because the economy hated them, but because they acted on emotion, not strategy. They followed the herd. They thought, everyone's selling, I better sell too. Or, everyone's getting back in, I can't miss out. And that right there, that herd mentality, that's your death sentence in a bear market. Take 2020, for example. In March, the S&P 500 dropped more than 30% in just a few weeks. People freaked out. Retail investors dumped stocks at record rates. $326 billion flowed out of equity funds in just 3 months, according to Morningstar. And yet, just a few months later, markets hit new highs. Most of those who sold at the bottom, they never made it back. They locked in their losses, while the disciplined investors laughed their way to the bank. Now, ask yourself, when the next crisis hits, and it will hit, where will you be? Among the 85% who panic, or among the 15% who win? Listen, being defensive doesn't mean being scared. It means being smart. It means accepting that the world doesn't owe you permanent growth. It means holding assets that can survive a downturn. It means resisting the urge to do something just because the market is red. You need to start thinking like a general preparing for war, not like a tourist planning a sunny vacation. Defensive stocks, cash reserves, gold, short-term bonds, these aren't just boring tools. They're your lifeboats when the ship starts sinking. Back in 2008, one of my good friends, a man named Robert, did exactly that. While everyone else was chasing real estate dreams and tech stocks like there was no tomorrow, Robert quietly shifted a large portion of his portfolio into cash, treasury bills, and solid dividend-paying companies. When Lehman Brothers collapsed and panic ripped through Wall Street, Robert didn't lose sleep. While his neighbors were foreclosing on their homes, he was busy buying distressed assets for pennies on the dollar. Today, he's worth 10 times what he was back then. You think Robert is a genius? Number. He just accepted a simple, painful truth. Markets are brutal to the impatient. Markets don't reward the emotional. They reward the prepared. And preparation doesn't start when the crisis is on CNN every night. It starts now. I want you to burn this into your brain. When the next crash happens, the media will scream, "It's too late to sell." Then, 6 months later, when markets rebound, the same media will scream, "You must buy before it's too late." Don't fall for it. Your number one job in the coming months is not to maximize your gains, it's to protect your capital. Because if you lose 50% of your portfolio, it takes a 100% gain just to break even. Think about that. It's basic math, but most people ignore it until it's too late. Right now, as we speak, cracks are forming. U.S. household debt has surpassed $17.5 trillion, a record high. Credit card delinquencies are spiking. Corporate bankruptcies are up 40% year over year. Banks are tightening lending standards. These are not random facts. They are early warning signs, flashing like neon lights. But what are most people doing? Buying meme stocks, FOMOing into overpriced real estate, chasing high-yield junk bonds as if risk has magically disappeared. It's a tragedy in slow motion. Listen, I don't care how sexy a hot stock tip sounds. I don't care how many TikTok videos tell you to buy the dip. If you don't have a cash cushion, if you don't have a battle plan for your portfolio, if you're investing money you can't afford to lose, you're sitting on a ticking time bomb, and no one will come to save you when it blows. This channel exists for one reason: to share real, unfiltered knowledge about becoming wealthy, building businesses, investing wisely, and reaching true financial freedom. If you value your future, hit that subscribe button, smash the notification bell, and share this video with everyone you care about. Seriously. We're in this together, but only if you choose to act. Now, let's get even more real. You've got to be ready to sit on your hands when everything in your gut screams, sell. And you've got to be ready to buy when everything in your gut screams, run away. Because that's exactly when the real money is made. Think back to Warren Buffett, the man practically synonymous with buying when there's blood in the streets. During the 2008 crisis, Buffett poured billions into companies like Goldman Sachs and Bank of America when nobody else wanted to touch them. Was he lucky? A number. He was liquid. He was disciplined. He was ready. You want to survive? No. Thrive in the coming crisis? Then your plan has to be boring as hell. You build your cash reserves now. You trim your exposure to high-risk assets now. You focus on quality now. You accept smaller, safer returns now, so that when the crash comes, you're the one standing tall while everyone else is crying into their empty portfolios. And let me tell you something else. If you do it right, you'll have the opportunity of a lifetime. Crashes are when generational wealth is created. If you have cash when others are desperate, you will buy assets, real estate, stocks, businesses at fire sale prices. And 5-10 years later, you'll look back and thank yourself for being the rare breed who prepared instead of panicked. Don't make the mistake of thinking you'll have time to figure it out later. Crashes move fast. Liquidity dries up overnight. Markets don't send engraved invitations. They punch you in the face when you're not looking. So here's what you do. Starting today, review your portfolio. Cut out the garbage, build cash, build safety, make peace with missing some gains. Because survival is the name of the game. And remember, he who survives, thrives. This isn't theory, it's reality. And the clock is ticking. If you've gotten value out of this, remember this channel is 100% about helping you build real wealth, not fantasy TikTok dreams. We talk business, investment strategies, mindset shifts, and how to actually win the long game. If you don't want to get left behind, hit follow, turn on that bell, and share this video. You could literally change someone's life just by passing this message along. Stay sharp, stay prepared, and when the crash comes, you won't just survive. You'll dominate.